Hi, my name's Steve Clapham. I'm the founder behind the balance sheet. And if you've been watching some of our videos on this YouTube channel, you'll know that we very rarely talk about stocks, but I couldn't resist it. Now, be careful because I have a position in this stock that I'm going to talk about, and I don't want to mislead you. I'll tell you a bit more about that in a minute. Before I start, if you are new to the channel, I just want to tell you that you should sign up for our newsletter on behindthebalancesheet.com. You'll get access to our club site, which has lots of great free training material. If you want to take your investing more seriously, have a look at our investing courses for private investors. They're really good, and I'm happy to answer any questions. Now, as I said, I don't normally talk about stocks because what I've tried to do in this channel is generate evergreen content that will be around for years. But this week, Tesla, I couldn't resist having a talk about it. I couldn't resist putting on a small short. I mean, I amn't betting the ranch on this. I'm having some fun and hopefully we'll make a little bit of money. But, you know, if you look at Tesla, it's been a parabolic ride in the last couple of years. We zoom in on that last couple of years, it's been amazing. And, you know, I'm doing this after we've had a massive correction. And it's not as if we haven't had massive corrections in the past. You know, we had a massive correction here, we had a big correction here, and the stock has rebounded. But what's interesting, I think, about this is a very, very steep ascent. And of course, here, the steepness of that ascent at 50% ascent is for a very, very large company. And you've got to ask yourself, why is this? Now, I don't believe it's institutional investors saying, oh, Tesla's cheap. And I'll talk about the valuation later. I think that what's been happening is the retail market has been buying call options, and the cover, market makers forced to buy stock to cover their exposure, has been driving the stock up relentlessly. And there's been very few sellers. But Elon Musk's tweet at the weekend has caused a really sharp correction. Now you might say, well, you know, you should have told us this at 1200. But in actual fact, I've been busy this week and this is not my day job, right? So I have put on a small short myself, and I think this is a very interesting juncture for Tesla. Now, this was the tweet. You'll remember, if you haven't seen this, you've been Rip Van Winkle, you've been sleeping. So Elon Musk tweeted on November the 6th that much is made lately of unrealized gains being a means of tax avoidance, so I propose selling 10% of my stock. Do you support this? Astonishing 3.5 million votes. 58% said yes. I don't know what motivates somebody to vote in a poll like this and why you would vote yes or no and why you would care. However, what is very interesting about this is he said, I don't take a cash salary or bonus from anywhere. I only have stock. That's the only way for me to pay taxes personally is to sell stock. Well, that is actually not true, because this article on Markets Insider, Michael Burry, who's been a big bear of the stock, he hasn't been right yet, but he's the guy that was in The Big Short, if you remember that movie, and also the book. Burry said that Musk might want to cash out some stock to service his personal debts. He noted, so this is quite some time ago, he noted the executive had 88 million Tesla shares, or 36% of his total stake, pledged as loan collateral as of June 30th, 21. That 36%, I think, was 44% 2 quarters previously. So Musk can easily raise money because he can borrow on margin. He can just borrow use his stock as collateral. And a lot of very wealthy executives in America have done this. You know, that's how they've made even more money, because they've kept their stock, but they've borrowed against it. But clearly, Musk has decided to sell stock. And I believe, why has he gone to Twitter to have a poll? Well, I think the most likely reason is he can say, it wasn't my decision. I'm guessing. I mean, I don't know. I've got no insight into Elon Musk. But what's quite interesting is that his brother, Kimball, I mean, where they get these names from, who knows? Anyway, he bailed out. I mean, not a big lot, only $100 million. I mean, that's like pocket money for these guys. Maybe he needed a new plane or something. But he did this the day before Musk tweeted, and this suggests to me that there's a slight change in attitude, and I think that's really, really important. It's not to say that Musk hasn't in the past said that the stock's expensive, and the stock has continued to go up. So I'm not saying that this is black and white, not far from it. But if you look at the valuation, the market cap is still over $1 trillion. This excludes the stock that's going to be issued. So the market cap's actually significantly higher than that, over 10% higher, for 51 billion of revenues. So it's on 20 times sales. Now, I mean, 20 times sales is not off the charts for internet stocks, but Tesla is at core a manufacturing business. And I'm going to come back to Tesla because I think it's a very interesting situation, and I think I should have been doing more about it. Obviously, it's on 100 times EBITDA. It's got a free cash flow yield of almost nothing. But obviously, if it grows very significantly, those numbers could fall. But remember, a manufacturing business isn't like an internet business. An internet business that's capital light can grow without the commitment of significant additional cash flow into capital expenditure. Tesla can't do that. For Tesla to produce 5 million cars a year, it's going to have to quintuple its capacity, or certainly more than double it. But don't take my word for the fact that Tesla is a manufacturing company producing electric vehicles in competition with other manufacturers. Take this guy's word for it. Listen to this podcast with John Armitage, and you can get this on the website. And John was talking about Tesla and was making the point that there are going to be lots of car manufacturers producing electric vehicles. Every single automobile manufacturer on the planet will be producing electric cars. Otherwise, they aren't going to exist. So Tesla has done an amazing job, don't get me wrong, and they've done an amazing job in getting to the position they have. But the competition from here will be tougher. And they're much, much, much larger. So the opportunity to make the gains and to get to the ARC Cathie Wood's $3,000, $4,000 per share. I mean, I think this is fantasy. I've read the note. I mean, I almost felt that it was a joke. And, when I look at this, and I look at the share price, $1,500, the market cap, 1.5 trillion, being 1,000 shares in issue, I go, well, this is a very basic mistake. How diligent are they in doing the research? Because if you don't need to be smart. You can go to the Tesla 10K and you see the fully diluted shares in issue are over $1 billion already. I mean, this is straight from the 10K. I've not even done the calculation. And the reason that Musk may have a tax bill to pay is because some of the performance awards start to vest. And you can see here in March 2018, the directors granted Musk 101 million stock options. I mean, why? Who knows? But, as if he wasn't going to do a good job if they didn't give him another $100 billion. I mean, I can't even begin to understand this. But you can see that achieved and certified the first tranche. I haven't gone into the detail of where, when they vest and so on. This one's probable, and these milestones have all been achieved. So, in terms of annualized adjusted EBITDA, the adjusted EBITDA is a joke, incidentally. And, when you look at this, I had a great fun call with Chris Bloomstrand, and he was saying, we were talking about Tesla, and of course, for both of us, Tesla is the epitome of the opposite of Berkshire. Now, you can argue about Berkshire Hathaway. I don't have a position in it. I don't own it. It's underperformed for over quite a long time frame. But, when you look at Tesla, look at this arc valuation of the insurance business. The insurance business is almost negligible today. And the argument is that they've got lots of data on 1 million vehicles. And there's no question they've got lots of driving data on 1 million vehicles. But that doesn't necessarily mean that they're going to be able to create a large insurance business. You have to convert that data into what's insurance risk, and you've got to create an insurance vehicle. And they're saying that this is going to be worth $60 billion in 2025, and they look at Progressive's EBIT margin. Well, I don't know how long Progressive's been around, but Progressive's $56 billion, about that size. It's not just motors, and I imagine that Progressive has been around for more than 5 years, right? To produce, in fact, less than 5 years. This is a 2025 valuation. So I think that, there's a lot of nonsense being talked about Tesla. And yeah, look, it's done incredibly well. I am stupid because I haven't benefited from that massive ride up. And now we've seen this big correction, and you could well see the stock continue. It could go up. It could go up through 1,400. It could, Cathie Wood could be right. But I'm betting against it. I'm using this as my sort of closing picture, the Remetz car Tesla hearse, because I'm not saying that Tesla's not going to continue. It's a great company. It's valuable company. It's just not this valuable. And sooner or later, the stock market is going to wake up and going to say, So I have a short position in Tesla. It may not be a position for very long. I may close it tomorrow. Do not take this as investment advice. It is not intended as investment advice. Do your own research. But if you do own Tesla, you should examine those bull arguments much more carefully. Don't forget to subscribe to our YouTube channel, check out our blog and newsletter on behindthebalancesheet.com, and subscribe to the newsletter and the YouTube videos. And please also check out the podcast. Thanks for watching.